Hello students, welcome to the lecture on budget concept and types, and after this lecture we will be able to learn the following objectives. Explain about budget and budgeting. Understand budgeting control. Explain the types of budgets. Discuss the master budget. Understand problems with zero-based budgeting. Let's start with budget concept and types. A budget is a financial plan for the future concerning the revenues and costs of a business. Budgets for income or revenue and expenditure are prepared in advance and then compared with actual performance to establish any variances. Budgetary control is the process by which financial control is exercised within an organization. Managers are responsible for controllable costs within their budgets and are required to take remedial action if the adverse variances arise and they are considered excessive. Concept of budget. A budget is a financial plan for future activities. It is a plan for saving, borrowing, and spending. The budgets used in business often include a sales or revenues budget detailed by products or services, production budgets, budgets for each department in the company, cash budget, capital expenditures budget, and others. The combination of all the budgets is referred to as the company's master budget or profit plan. Budgets help management decide which activities it will undertake and how the company's resources will be used. Budgets can also assist in controlling the actual costs because managers realize that the costs of their activities will be compared to the budget. The main characteristics of a budget are: it is prepared in advance and is derived from the long-term strategy of the organization. It relates to future period for which objectives or goals have already been laid down. Advantages of budgets. Why is budgeting money important? When you budget money, you're giving yourself more room for error in life. When you budget the amount of money you spend, you're always in a much better position financially overall. Another great reason why you should budget your money is based on the spending side. There are a variety of tools and techniques that you can use if you want to start budgeting your funds. But one of the best first step you can take if when you are budgeting money, you're capable of finding the areas of life where you're spending money on unnecessary expenses. Budgeting. Business budgeting is one of the most powerful financial tools available to any small business owner. The most effective financial budget includes both a short-range, month-to-month plan for at least one calendar year and a long-range, quarter-to-quarter plan we use for financial statement reporting. The long-range plan should cover a period of at least 3 years. Some go up to 5 years on a quarterly basis or even an annual basis. Budgeting control. The exercise of control in the organization with the help of budgets is known as budgetary control. System of creating budgets, monitoring progress, and taking appropriate action to achieve budgeted performance. A budget should provide the information necessary to enable approval, authorization, and policy-making bodies to assess a project proposal and reach a rational decision. The process of budgetary control includes preparation of various budgets, continuous comparison of actual performance with budgetary performance, and revision of budgets in the light of changed circumstances. Organization for budgeting. The setting up of a definite plan of organization is the first step towards installing budgetary control system in an organization. Responsibility for budgeting. The responsibility for preparation and implementation of the budgets may be fixed as under: budget controller. Although the chief executive is finally responsible for the budget program, It is better if a large part of the supervisory responsibility is delegated to an official designated as budget controller or budget director. Budget committee. The budget controller is assisted in his work by the budget committee. The committee may consist of heads of various departments, with production, sales, finance, personnel, purchase, etc., with the budget controller as its chairman. It is generally the responsibility of the budget committee to submit, discuss, and finally approve the budget figures. Fixation of the budget period. Budget period means the period for which a budget is prepared and employed. The budget period depends upon the nature of the business and the control techniques. Budget procedures. Budgeting process is a systematic activity that develops a plan for the expenditure of a usually fixed resource such as money or time during a given period to achieve a desired result. Key factor. It is also termed as limiting factor. The extent of influence of this factor must first be assessed in order to ensure that the budget targets are met. Making a forecast. A forecast is an estimate of the future financial conditions or operating results. An estimate differs from a budget in that the latter embodies an operating plan of an organization. A forecast may be prepared in financial or physical terms for sales, production cost, or other resources required for business.
How to prepare a capital budget? It's an excellent question. I'm going to assume that what you mean by that is analyzing a budget or preparing a budget to take a look at the fact that if a person or a company is investing monies into a particular project, usually a long-term asset like a plant or particular equipment, will my money give me a return? Well, like all budgeting, and you can almost think of it simply as a home budget, you need to take a look at all the expenses that are going to be going into this project and what kind of income or profit are you going to be getting out of it. Now, I believe the difference that you're looking for between a capital budget and regular home budgeting is you haven't actually done it yet, so you're taking a look at potential. Some of the things you might want to consider is the equipment or the plant or the project that I'm looking at investing, is technology going to affect this down the road? If so, when will it affect? For instance, if you had a automobile building plant and you were still making Model Ts in today's environment, you probably wouldn't be too successful other than an antique car. Those are the type of things you'd be looking at a capital budget. So it takes a little homework, but basically the concept's the same. What are you going to lay out? What do you expect to get back in, and is it profitable?
Advantages of budgetary control. The budgetary control system helps in fixing the goals for the organization as a whole and concerted efforts made for its achievements. Some of the advantages of budgetary control are maximization of profit. The budgetary control aims at the maximization of profits of the enterprise. To achieve this aim, a proper planning and coordination of different functions is undertaken. Coordination. The coordination of various executives and subordinates is necessary for achieving budgeted targets. Specific aims. The efforts are directed towards achieving some specific aims. If there is no definite aim, then the efforts will be wasted in pursuing different aims. Economy. The planning of expenditure will be systematic and there will be economy in spending. Determining weakness. The deviations in budgeting and actual performance will enable the determination of weak spots. Corrective action. The management will be able to take corrective measures whenever there is a discrepancy in performance. Types of budgets. Different types of budgets are described as follows. Master budget. Master budget is a combination of all other budgets prepared for a specific period. It shows the overall budget plan. All the budgets are coordinated into one harmonious unit. It is prepared by the budget officer and it requires the approval of the budget committee before it is put into operation. Sales budget. The sales budget is usually the keystone in planning and control of operation of a business. Sales forecast serves as a base for the sales budget. The sales manager should be made directly responsible for the preparation and execution of sales budget. Production budget. The production budget is a forecast of the production for the budget period. It provides an estimate of the total volume of production, product-wise, with the scheduling of operations by days, weeks and month, and also a forecast of the closing finished product inventory. The factory manager is the person generally made responsible for its preparation, administration and execution. Materials budget. Material budget can be prepared on the basis of standards or historical data regarding percentage of raw materials to total cost adjusted for current price and normal wastage of material. Purchase budget. Purchase budget gives the details of material purchases to be made in the budget period. Purchase budget enables the budget officer to provide funds in the cash budget according to delivery schedules, terms of payment and credit period. Direct labor budget. The direct labor budget tells about the estimates of direct labor requirements essential for carrying out the budgeted output. The purpose of this budget is to ensure optimum utilization of labor force. Cash budget. A cash budget is a summary statement of the firm's expected cash inflows and outflows over a projected time period. The overall objective of a cash budget is to enable the firm to meet all its commitments in time and at the same time prevent accumulations of unnecessary large balance with it. Fixed budget. A fixed budget is a budget which is designed to remain unchanged irrespective of the level of activity actually attained. Fixed budget is useful when there is no significant variation between the budgeted output and the actual output. Flexible budget. Flexible budget, also known as variable or sliding sale budget, is a budget which is designed to furnish budgeted costs for any level of activity actually attained. A flexible budget is a budget designed to change in accordance with the level of activity actually attained. A flexible budget is more realistic, useful and practical. The likely changes in the actual circumstances are taken into account while preparing a flexible budget. Advantages of the master budget. The master budget allows managers to re-evaluate their plans either starting with their current activities or start from zero. Zero-based budgeting, justifying all activities that do not start at zero. The master budget can also be used as a form of benchmarking. Disadvantages of the master budget. It includes the lack of participating from subordinates, misleading information, and difficulty of acquiring accurate and reliable information. Zero-based budgeting. Zero-based budgeting, ZBB, is an alternative approach that is sometimes used particularly in government and not-for-profit sectors of the economy.
We're talking about zero-based budgeting. Now, what is zero-based budgeting compared to more traditional budgeting? Well, in traditional budgeting, if you remember, we're looking at creating a forecast for what we're anticipating will happen in the future. And we're looking at exactly what we've done in the past, what changes we're going to make in the future. Well, in zero-based budgeting, we take a very different approach, because in zero-based budgeting, what we're focused on is not so much what we've done in the past, but what we need to use for the future. So all costs have to be justified on a line item by line item basis. Any costs that cannot be justified are automatically taken down to zero. This changes everything. It really requires us to think and look back at the best utilization of our resources. One of the big problems in traditional budgeting is the tendency to look at what we've used before and just add a certain margin for the growth, without ever looking at whether or not we need to spend what we spent before. So this forces us to be more efficient and more effective in the use of our resources. In fact, in many cases with zero-based budgeting, we can actually produce more in the next period than we did in the last period, spending the same or even less, because what we're really effectively doing is eliminating waste.
Advantages of ZBB. Alternatives analysis. The ZBB requires that managers identify alternative ways to perform each activity, such as keeping it in-house or outsourcing it, as well as the effects of different levels of spending. Budget inflation. Since managers must tie expenditures to activities, it becomes less likely that they can artificially inflate their budgets. The change is too easy to spot. Communication. The ZBB should spark a significant debate among the management team about the corporate mission and how it is to be achieved. Mission focus. Since the ZBB concept requires managers to link expenditures to activities, they are forced to define the various missions of their departments, which might otherwise be poorly defined. Required review. Using ZBB on a regular basis makes it more likely that all aspects of a company will be examined periodically. Resource allocation. If the process is conducted with the overall corporate mission and objectives in mind, an organization should end up with strong targeting of funds in those areas where they are most needed. Disadvantages or limitations of ZBB. Difficult to define decision units and decision packages as it is time-consuming and exhaustive. Forced to justify every detail related to expenditure. The research and development R&D department is threatened, whereas the production department benefits. The ZBB must be clearly understood by managers at various levels to be successfully implemented. In a large organization, the volume of forms may be so large that no one person could read it all. Honesty of the managers must be reliable and uniform. Any manager that exaggerates skews the results. Summary. A budget is a financial plan for and costs of a business. Budgetary control is the process by which financial control is exercised within an organization. Business budgeting is one of the most powerful financial tools available to any small business owner. Budgeting process is a systematic activity that develops a plan for a given period of time to achieve a desired result. Master budget is a combination of all other budgets prepared for a specific period. The sales budget is prepared in quantitative terms of units expected to be sold and the value expected to be realized. The material budget generally deals only with the direct materials. Zero-based budgeting, ZBB, is an alternative approach that is sometimes used particularly in government and not-for-profit sectors of the economy.